Just getting set up. All right. Do. All right. Oh, why am I hearing myself? All right, cool. So it looks like we are live in the group. So that's good. I'm gonna go ahead and let these guys in here. All right, cool. All right, so today, guys, welcome to the live. We're talking about Bitcoin with my lovely friend and CPA, James Rainwater. I'm so excited. He had posted something about Bitcoin and I saw it and I'm like, oh my gosh, I gotta get him in here. Because Bitcoin's not my expertise by any means. So I'm super, super excited. He's just gonna talk about Bitcoin. And then if you guys have certain questions, anything, we will be answering questions. So drop it in the comments and we will get to them towards the end. And James, thank you for joining us today. I appreciate it. I'm excited that you're here.
Sure thing, absolutely. Thanks for having me, Ashley. It'll be fun to talk about Bitcoin a little bit. And just to clarify, when you asked me to do this, I said, sure, I'd love to talk about Bitcoin, but I'm definitely not a Bitcoin expert. And I'm definitely not a technology expert on Bitcoin, and not even really a tax expert, but I'm super curious about it. So I like to figure things out. I like complicated tax problems to solve, and Bitcoin is all those. So that's kind of how I learned what I have learned about Bitcoin. A lot of it's self-learning. A lot of it's figuring out things like for our clients, right? That they have an issue and then we have to figure out how to deal with it. And then a lot of this stuff, it's not clear like how we handle it. So we'll start pretty basic, but realize, some of the things I'm going to say today, some of the things we'll probably talk about, and maybe even when we get into the questions, there's not a lot of clear guidance on some of this stuff, especially if we end up talking about, Nifties and DeFi and stuff like that. There's just not clear guidance on all that stuff from the IRS right now. We think we have some pretty good ideas on how that stuff's going to be treated based on what they've issued so far. But some of it's a little, guesswork and a lot of gray area. And, how do we want to position clients both to be in a good tax position, but also, how do we think the IRS is going to respond to some of the, these transactions and how they actually work? So backing up a bunch, going all the way to the beginning, like, Bitcoin and blockchain. I'm sure you've heard a tremendous amount in the news over the past year or so. My famous story about Bitcoin is I used to work with a lot of technology firms, and about 10 years ago, I had a client that wanted to pay me in Bitcoin. And I said, I guess I'll figure this out. I got a Coinbase account. They paid me 3 Bitcoin. I was just getting my firm started, and I said, all right, I'm going to cash out these 3 Bitcoin, and I'm done. I'm done with Bitcoin, whatever this is. So in hindsight, I probably should have kept those 3 Bitcoin rather than cashing out the $1,800 for the tax returns that I did. But that's what we did at the time. So investing in Bitcoin. The terminology has confused a lot of people because it's called coin and called cryptocurrency. But the United States has taken a really strict look at it, and they don't consider it a currency and don't consider it actual coins. So, in a normal currency, if you buy and sell francs or Canadian dollars, those are investments. And you get exchange rates and you may have gain or loss. Those are, we're going to talk a lot about capital gains versus ordinary income. And the preferential rates are typically long-term capital gains. So when you have investments like stocks, bonds, you hold those for a year or more, that would be long-term, and you get lower capital gains rates when you sell those if you have a gain. Most people thought like, hey, you buy or sell Bitcoin, you have capital gain, capital loss, um, which is true. Um, but what a lot of people didn't realize is, there's different transactions that can trigger those sale events. So backing up a little bit, you know, cryptocurrency, Bitcoin, Ethereum, all the other coins that are out there are not treated like currencies. They are treated as assets. Um, and when you exchange one asset for another, that can be considered a sale. When you actually sell it for cash, that's considered a sale. So based on how long you've held that is going to be your holding period. If it's short term, it'll be taxed at those ordinary income tax rates, which are in a lot of cases higher than the capital gains rates. But if you hold it for a year or more, then you get the preferential capital gains rates on the sale. What has gotten a lot of people in trouble is we've had a lot of growth. Not the last month or so, notwithstanding, but up till about a month or two ago, there was a lot of appreciation in Bitcoin, which makes my story so sad at the beginning. But you had a lot of appreciation in Bitcoin. So, and then we have a tremendous growth in the number of coins that are out there. So you might trade Bitcoin for Ethereum, um, and never touches cash, like dollars are never getting involved. But if you trade Bitcoin for Ethereum or Dogecoin, then that's considered a taxable transaction by the IRS. So the IRS looks at that and says, hey, that's a sale of Bitcoin and a purchase of Ethereum. So now you have a taxable event. So if you have appreciated Bitcoin and sell it, for cash, that's a taxable event. If you have appreciated, any coin, Bitcoin, Ethereum, and you exchange it for another coin, now that's also a taxable event, but you may not have the cash to pay those taxes. So that's where we see people get in trouble sometimes. It can create a downward spiral of tax where you exchange Bitcoin for Ethereum. Now you have taxes due. Now you have to sell more crypto to cover those taxes. If you're not going to use cash to pay those taxes, now you owe more taxes on the crypto that you sold to cover the taxes that you needed to cover the first taxes. So it can be this downward spiral of taxation if you don't kind of plan for that and give some thought around all of that. So, one of the things we look at is, how do we mitigate or plan for the taxes on the different transactions with crypto? So one is planning and being aware. I think that's the first thing. I think a lot of people got caught really off guard last year in 2020 and again in this year with sales of crypto being taxable or exchanges being taxable. Um, a lot of people also got caught off guard not knowing that you had to report those transactions or feeling because it's somewhat anonymous in cryptocurrencies that you don't have to report those transactions. And the IRS has been able to subpoena a lot of the platforms like Coinbase to get those lists of transactions and be able to see who has bought and sold uh, cryptocurrencies over the last year or so. And now they're starting to match those up to whether you reported those on your tax return. Um, Another concept, I think most people probably get this, is you're only paying taxes on the gain piece. So if you bought it at 20 and then you sell it at 30,000, then you're only paying taxes on that 10,000 of gain. So that gets confusing in itself. If you don't know what you paid for it or you don't have good tracking, if you're buying and selling a significant amount, it gets difficult to track all that. So having a system in place just to track what you paid for it, what you sold it for, and then how. The IRS gives you a couple different options for applying the cost to the coins that you're selling. You can use like an average cost or specific cost, but you have to have some sort of method for that. So a lot of times, if you have any significant crypto holdings, then some sort of software to help you with that is going to be super helpful. As far as kind of mitigating the tax on cryptocurrencies, there's a few different strategies, and like I said, you definitely want to plan. Like planning for that transaction is the biggest piece. Calling Ashley or myself 6 months after you sold $1 million in crypto is tough to do anything about that. And 6 months is kind of a magic number for a couple of the strategies. So unfortunately, I've had that where I've had clients or prospects call me, and it's been 6 months or 8 months since the transaction happened, and there's really just not a lot that we can do. So really getting your advisor in and having that conversation before you sell. If it's going to be a large block that you're selling, that's super important to do, and get some planning around that. There's a number of strategies. One, just trying to get long-term gains. If you're a day trader, obviously that's difficult. But if you're just kind of investing and your focus is more long-term, then you want to try to go for that 12 months, that year and a day, to make it a long-term gain versus a short-term gain. If it's less than a year that you hold it, then you're going to pay higher taxes. You're going to pay at ordinary income tax rates, versus if you hold it for a year or more, or over a year, then you're going to have those capital gains rates. We have some other strategies like qualified opportunity zones, and that can sometimes offset afterwards, but it gets a little complicated, and maybe investments that you don't necessarily want. If you have investments in like a self-directed IRA, then that would all be sheltered in the IRA, but you have limited ability to get that money back out if you actually want access to the gains without penalty if you're under the retirement age. You can donate appreciated crypto coins to charity. One of the strategies we use a lot is with like donor advised funds, or donating appreciated assets, so that you're not necessarily out cash, but it can help offset some of the tax. Considering where you live, I've talked to people in Puerto Rico, and there's a lot of crypto coin investors in Puerto Rico suddenly. So where you're domiciled, whether it's a state with low tax or no tax, or even a country. We're talking about a large transaction recently, $70 million art transaction, and the acquirer was in Singapore, and there's no capital gains tax in Singapore. So some people are very mobile and able to domicile in some place like Singapore, Puerto Rico. That might make sense. Planning the transaction out ahead of time and thinking about where you're going to be can be a huge advantage. And then the next one, we've heard, I don't know if everybody has, but like being in the tax circles, I've heard a lot about it this week. There was a study that came out about the top billionaires and how they pay very little in tax. Some cases, like Warren Buffett, theoretically pays 0.1% tax on his income. And Jeff Bezos pays like 1% tax, and Elon Musk, I think, was higher at 3%, tax on his income. And that's kind of the billionaire loophole that's gotten a little bit of press this week. And what they do is, instead of selling Amazon stock and having to pay capital gains on that, then what he does is he takes, he's got like an $80 million credit line personally that's secured by his stock in Amazon. So he has access to all the cash flow he could ever want personally, but he's not paying capital gains. If he ever does sell Amazon stock, then he can pay down the line of credit. So that's kind of the billionaire loophole. There's specialty banks that will loan in those cases. So if you have a big Bitcoin or cryptocurrency position, or even a large investment position, there's specialty banks that will loan on that up to certain limits. So that's another way. Maybe instead of cashing out, maybe instead of selling, you look at a loan for what you need. So an interesting circumstance that's come up recently with the decline in prices, which is not great for investment returns, but creates an interesting tax situation with the decline in prices recently, is that with the decline in prices and the fact that the United States doesn't recognize Bitcoin as a currency or an investment, then the wash sale rules don't apply. So what that says, in typical securities, like I can't buy Amazon at 100, it goes down to 80. I sell it at 80, and then I rebuy it at 80. theoretically have a loss, but the wash sale rules by the IRS say that I can't do that. I can't create fake losses by selling a security and then repurchasing it at the same value. That doesn't apply to cryptocurrencies, which is really interesting. So, if you purchased higher, if you purchased at 50,000 or 60,000 into Bitcoin, and now I didn't look at it today, but it's been in the mid 30s for the past week or so. If you sell it at, let's say, 35, you can take that $15,000 capital loss, use that against other capital gains that you might have to knock those down, but you can also repurchase the coin at 35. You don't want to do it immediately. There's some other rules called sham transaction rules that you want to be careful of. But if you sell it today at 35 and pick it up tomorrow, close to that, it's not considered under the wash sale rules. You're allowed to do that and recognize that loss. So that's really helpful. If you have or you're planning on a lot of capital gains this year or capital gains from other transactions, and you have that position you're sitting in crypto where you can take some losses, offset those other gains, that's super helpful. And the only thing that we want to be careful of there is one, the sham transaction rules. But then if you don't have capital gains to offset, then you're limited to $3,000 in capital losses per year. So we want to be careful, not just taking, we don't have $100,000 in capital losses that we can't use and they just kind of sit there and roll forward. Maybe we do, if there's something next year we're anticipating or something like that, but that is kind of a specific strategy that may work in some cases. Ashley, before I roll into other topics, how are we doing so far?
So far, so good. Keep going.
Okay, thanks.
Yeah.
So I mentioned, let's talk about distributed finance for a couple of seconds. That's attached to blockchain, works off of cryptocurrencies and blockchain, and it's a lot like banking transactions, but it's distributed over the blockchain platform. So I may have a position in Bitcoin or Ethereum. What I can do is go on certain platforms that facilitate this, and I can loan someone else my Ethereum. Typically, I'm going to get paid back in Ethereum, so it's going to be like interest, just like a regular loan, like I'm loaning somebody money. They're going to pay me back with interest, and then I would claim that interest as taxable income on my tax return. With cryptocurrency, it works the same way. You're going to have a loan of the Ethereum, you'll get paid back in Ethereum plus more Ethereum as interest. And then that additional that you get back is going to be taxed just like interest at ordinary income tax rates. Now, as that goes into your portfolio and grows, grab some water. As that goes into your portfolio and grows, that interest piece, you've already paid taxes on it as interest. As it grows, you're going to have capital gains on the additional appreciation. So there may be some cryptocurrency in your portfolio. If you're loaning that, you may have some cryptocurrency that you're paying taxes on both ordinary income tax rates and capital gains rates. So it's possible that you could see both of those. There are some platforms that don't pay you back in the cryptocurrency that you're loaning. They have their own tokens for their platforms. In that case, it's not going to be ordinary income tax. It's going to be capital gains. And now we're getting like into the super gray area too, where one is confusing, and two, like we don't have really clear guidance from the IRS. So there's a lot of kind of speculation and people familiar with crypto kind of coming in to weigh in to say, okay, if we had to guess how the IRS is going to treat this based on how they're treating other transactions, this is probably how they're going to treat it. So we're trying to be conservative in how we approach some of this stuff. Sticking with DeFi for a second, there's also yield farming where you can, operate on certain platforms. You get paid a yield for operating on those platforms for doing transactions, maybe more like a day trader, if you're really active in trading cryptos, then you may earn yields by operating on certain platforms. they're typically going to be just like interest, where you're earning those as ordinary income, paying ordinary income tax rates on those, and then you're going to pay, if there's additional appreciation after you earn it, then it's going to be capital gains on the appreciation. So it keeps getting interesting. I think that's all I'll cover right now for DeFi. Um, there's also something called forks in cryptocurrencies, and forks is I think the best way to think about it is like a split. And there's several currencies that have gone through forks, and again, I'm not a technical person, so I'm not going to get super technical on what it means for a coin to fork, but it can be an update in the technology of the blockchain, or it can be the creation of a new coin. The original coin can continue to exist, and then you get the creation of a new coin when they kind of split apart. So one way is where you just have a tech update to the blockchain. So now you have the original technology, and now you have a new coin with new technology. Well, the same coin sort of with new technology. That's not a taxable event. If it's just an update of the blockchain, that's not a taxable event. If it creates two separate coins, so they split and now you have two separate coins, that actually is a taxable event. So the receipt of the new coin means a sale of the previous coin. So keeping track of that is super important, and knowing that you have a taxable event. And again, we get back to, there's software built for this now that I would think would be super important to have. If you're holding different positions, if you have a lot of these transactions, then it's going to be super important. Because what we want to really know for sure is, what was your basis? What was your acquisition cost? And then when did these transactions happen? So that we can appropriately assign the different values. So that the last thing we want is for the IRS to assign values. Like, we want to know what the values are, so we can see what the gain really is, and then be able to select the optimal gain on the tax, so that you're paying the least amount of tax possible. The IRS is not going to have that motivation. They're going to want to, maximize the gain and maximize the tax on the transaction. So we always want to have a methodology, and that's where the software really helps. So let's talk. The Nifties have been in the news a lot lately as well, which stands for non-fungible tokens. Um, Again, I will not even pretend that I understand the technology or what it even really is that you're buying. But they're popular a lot with sport clips, different art, the whole collection of art from Beeple, an artist in the United States, sold an entire collection of artwork for $69 million to the investor in Singapore. What Beeple, and I can't remember the guy's real name, but what he didn't realize at the time that he did that was that $69 million, he lives in the United States somewhere, that entire $69 million is a taxable transaction. It's a sale, and it's all taxable at ordinary income tax rates. There's no capital gains. It's work that he created and sold, and it's going to be taxable at ordinary income tax rates. So he's got a great big tax transaction coming up. Good problem to have, I suppose, when you sell your collection of artwork for $69 million, but still a super painful check he's going to have to write for taxes. So what it creates on the investor side, and we won't talk about like the investor in Singapore, but in the United States, if I, as an investor, if I use Bitcoin or Ethereum to buy a Nifty, then I'm effectively selling the cryptocurrency and I'm buying the Nifty, whatever it is, whether video, artwork, whatever it is. Like, I'm selling my crypto coin and buying that Nifty, so I've got a taxable transaction there when I sell the cryptocurrency, that I have to pay taxes on. If I bought $69 million worth of a Nifty, I've got a $69 million sale. I have to figure out what I paid for all of that, so that'll be my basis. And then I'll have to figure out my gain that I'll pay taxes on for that transaction. Um, there are a lot of people that are flipping the Nifties. So, it's a crazy market right now. It's a very speculative market right now, but people are acquiring these Nifties and then selling them because the values are just rising so rapidly. It's kind of a frenzy. What's interesting about that is that the Nifties, what we've heard come out of the IRS, what we've heard is that the Nifties are not cryptocurrencies. They're being treated as art and collectibles. So art and collectibles are taxed totally different from ordinary income and capital gains. Art and collectibles are taxed at 28%, which is even higher than the capital gains rate. Lower than the ordinary income tax rate, but higher than the capital gains tax rate. So if I buy, a video clip of LeBron, and then I sell it, a week later, and I have it like a $10,000 gain on that, I'm going to pay $2,800 in taxes on that at the end of the year because it's considered a collectible. If I okay, so if I sell that for Ethereum, now I'm back into Ethereum, where I have a basis in Ethereum, but my basis is going to be $10,000. I don't really have any cash, but I owe $2,800 in cash for taxes. So again, definitely a bind. If you don't have liquidity outside of cryptocurrencies, you can get into a bind really quickly by all these transactions kind of adding up over a year's time. You can imagine, like, if you're flipping Nifties, if you're going in and out of Dogecoin, Ethereum, Bitcoin, I don't know how many thousands of coins there are now, but if you're moving in and out, every time you're creating a taxable transaction, every time you exit a position, every time you exit a Nifty, you're creating these taxable positions. So if you don't know what those are, I would be, getting some plans around figuring that out. Probably getting some software in place to figure out, what do we need to do to understand all that. But that's kind of, I think, the key points right now, and maybe some of the more popular points of cryptocurrency. I'm happy to, like I said, I don't I don't know this stuff real deep. I'm not a super expert. I think it's fascinating, and love to go down rabbit holes on some of these different things. So happy to, like, entertain questions, or Ashley, if you want to have conversation and any of the points, happy to do any of those things.
Yeah, I think Johnny has a question.
Sure.
I definitely do. One, thank you. Very fascinating. I love the world of crypto right now. It's a lot of fun.
Yeah.
I have a couple questions, but a really easy one was like, what kind of software do you recommend, if you recommend any? Um, and 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 do you see Congress passing any laws that would clarify some of this stuff or make it easier? Or do you think this is kind of the direction it's going to go? And a completely different question that could influence that is, what about the events going on like El Salvador or Paraguay and things like that, where now they're going to recognize, Bitcoin as a currency? Can that, on a world scale, if countries start adopting it as I heard even Mexico is looking at that right now. Like, if they start adopting that as an actual currency, could that somehow force the US government to do the same?
Good questions.
A lot of questions there, but yeah.
Yeah, no, it's good questions, and some I don't have any idea.
Yeah, I know
But
there
I
might
could
just
kind
be
of talk through
thoughts.
it.
Yeah.
Yeah, like as far as the software, there's a few out there. I think CryptoTrader.tax is one that I think is probably on the forefront of tracking transactions. Um, and so the U.S. the when we talk about the tax code,
Yeah.
and looking at the tax code, and the thought of the House and the Senate simplifying it, I just think is impossible. Like, it just had those many people having a say in how we pay taxes never simplifies it. It always complicates it. When we look at the legislation over the past year that we've seen, that I think that's the way we're going to continue. There's just hundreds of changes that change it, but never simplify it. And there may be, we may shift, from like incentivizing fossil fuels to incentivizing, renewable energy, but we're not it doesn't simplify anything. It just makes it harder because now there's more rules of what does get included and doesn't get included. I think that cryptocurrency is going to be the same way. I think right now it's very favorable to the United States that it's taxed the way that it is. It's generating a tremendous amount of tax revenue. I can't see them turning that away. So I don't know that that'll change. I think it'll be a hard road for it to change and be accepted as a currency in the United States. Like I think, like I forgot the first country you mentioned, but
El Salvador.
El Salvador, yeah, and Mexico. And it's interesting because one of the first companies I worked with as a client in the crypto space, they had a payment system for like an Airbnb for South America because it's so hard to transfer money between countries and the United States for programs like that. So they had a crypto-based platform for booking Airbnbs in South and Latin America. And that was 10 years ago. So I think it's going to keep going in that direction. I mean, worldwide payment platforms have to improve. But I think that, the United States wants a way to regulate that, and be able to trace it, most importantly. I think they're getting closer to it. Like watching, I think it's another telling piece of that, I think, is watching the the recent news stories. Like today and yesterday, there were stories in the Wall Street Journal about criminal cases. And like yesterday, they reported that they were able to get some of the ransom money back for the pipeline ransomware. So, stories like that, like, mean that the U.S. is moving more towards, I think, an acceptance of it if they can trace it and recoup criminal activities. Another story today in the Wall Street Journal about how they were able to bust rings of criminal activity. I think that would help it, but you've also got countries like China that are banning it. A world power banning cryptocurrency. I don't think we'll go that direction, but I think it's a hard sell to get it to the point where it's a recognized currency in the United States. Did I get all your questions?
You did.
Okay.
I got another one if you guys want to hear another one.
Sure.
Is it beneficial at all at some point if you're doing a lot of trading to start your own company, like form an LLC or something like that?
It could be. There are rules that I don't have memorized where you can rise to the level of business activity versus a casual investor. So once you kind of rise to that level of business activity, then you can take deductions. Like normally, even as an investor, you can take deductions for platform fees and commission fees, that kind of stuff. But once you rise to the level of a business or a dealer, then you can take office expenses and cell phone expenses and computers and all those different things. So yeah, I mean, there can definitely be advantages of it rising to the level of a business, and to the extent that there's income being produced to a significant level, then different entity structures might make sense. What I would look at is, and that in that case, I think it's going to be a lot of day trading and short-term gains because they're going to be at ordinary income rates. So in that case, you're not jeopardizing long-term capital gains. So that's the thing that I would want to be careful of. Let's make sure that we're not jeopardizing long-term capital gains for business activity. But if you've already got short-term gains and that's what you're kind of building and churning, then different entity structures and a business entity might make a lot of sense.
I got a question.
Sure.
Someone has no Bitcoin, interested, but has no clue what to do. What are some tips that you would give them to get started in Bitcoin and investing in it? Okay,
so I have to be super careful there and say that I'm not recommending Bitcoin as an investment. I can't give investment advice on cryptocurrencies. And that's because I'm licensed and regulated, under FINRA. as an investment advisor. In addition to our tax firm and our CPA firm, we do wealth management and we're licensed under that. So I can't really give investment advice or say, whether you should or shouldn't or what coins make sense. There's a tremendous amount of information on the internet, and you have to really be careful, of who you're taking advice from. There's a lot of people that have very self-motivated interests in giving advice. So be careful of those. I think I would start small. When you look at, I follow a lot of billionaire investors, like Ray Dalio is a good example. And, they're typically not putting more than 10% in cryptocurrency. So I think I would look at my portfolio and say, how much do I want to put in cryptocurrency? Does it make sense? Do I have emergency funds, set aside first? Do I have some other investments that are somewhat liquid? You don't want to be in a position where you're forced to sell cryptocurrencies and recognize a gain or a loss that you weren't really prepared because you need cash flow. So to the extent that you have excess liquidity that you can put in cryptocurrencies, you could certainly do that. I would start slow and get educated. Coinbase, is a pretty easy platform as far as cryptocurrency platforms go to learn and get on board. I don't recommend Robinhood. I've just heard too many problems with Robinhood and them going down, even in the crypto world when prices are changing. So I would probably start with Coinbase. They have a lot of education on the Coinbase site. And there's tons of websites, for research and reading news. But yeah, I can't go too far into, recommendations as far as investing in crypto.
Yeah, that's perfect. Thank you.
Sure.
I do have another question. I know you kind of touched on this, but do you have any idea like how long it would take the US to turn into an actual currency? Like 10 years, 50 years, unknown?
Yeah, I mean, they could do it overnight if they wanted to, and they had enough support. I mean, it could be adopted. I think, there's a lot of, pushback. I mean, the banks don't necessarily want distributed banking. So they're going to push back. They don't want a new guard coming in, which is why I think you'll see, people like Jamie Dimon, speaking. He's the CEO of JP Morgan, speaking against crypto or something like that. So I think there's a lot of people that don't want it because they have a control over the banking system, and I think there's a lot of reasons why it does make sense. But there's also the Mark Cuban talks a lot about the difference between investing in cryptocurrency and transactions happening on the blockchain. So he's a big proponent of Ethereum, and because the Ethereum blockchain is able to support transactions, like using blockchain technology to sell my house, instead of using a real estate agent and having to go to the court and all that stuff, using the blockchain to register the sale of my house to another person. And there's a lot of hope in that, which could bring, I think, faster adoption, not necessarily making it a currency, but faster adoption of cryptocurrency. But Mark always points out, like, it doesn't matter what the price of Ethereum is. You're using the underlying technology. So to some extent, you would think that it would drive the price up because you need it to facilitate the transaction. But the technology is more important, and it doesn't matter as much what the value of the currency is or the coin is to drive the transactions.
Yeah, wow. Yeah. Yeah, this was
So,
amazing. Appreciate it.
cool. Sure.
I have a lot of learning to do in this category.
Yeah, just like Johnny's saying, like, I find it fascinating and love to just kind of dig into it. Wall Street Journal is a great source of information. On the tax side, we've got a lot of resources. For just kind of reading about the different tax, the ways that different transactions are handled. Yeah, actually, you and I are kind of tax geeks. We like to geek out on what happens, to different transactions, and how does it become taxable, and how can you structure that to, so that it helps somebody, and they don't get hit with a bunch of tax. So yeah, I mean, if anybody wants, more resources, happy to share those. But I think it's a lot of fun to kind of research and learn more in this space.
Yeah, absolutely. Any Bitcoin books that you read, or mainly just online resources?
Yeah, not too many books. Like I've tried to buy a couple books, but the books are out of date so fast.
Yeah.
Like I've got a couple of crypto tax books, and by the time they're printed, like things have changed. So it's pretty crazy. As far as taxes, like the um, it's mostly online. Like the tax software, they have great learning centers and knowledge centers on their websites. Their blogs are a great resource. Um, for tax, like our the tax advisor website they have some good in-depth articles, and then just kind of following articles, following conversations in the Wall Street Journal, Forbes. They'll occasionally have articles. As it's over the last year, it's really come more into the mainstream media than it was. In the past, it was like you had to really dig to get information, and learn more about it. But has become a lot more mainstream. So there's a lot more information. Of course, YouTube.
Yeah.
There's millions of YouTube videos on cryptocurrency and trading, and
Yeah.
I haven't seen too much on tax, but cryptocurrency is one of those ones where, like, I'll have a client say, "Hey, did you see this TikTok video about cryptocurrency tax?" And I'm like, "No, I didn't, but you can send it to me."
Yeah, that's awesome.
Yeah.
Awesome. Well, if someone
Cool.
wants to reach out to you and they need your help, how do they get in touch with you?
Sure. So, rainwatercpa.com is our website. James at rainwatercpa.com, and I'm pretty much Rainwater CPA on most of the, on Instagram, I think Facebook. Yeah,
Cool. Awesome.
awesome.
Well, I appreciate you jumping on, spending some time to chat with us. Means a
Sure
lot.
thing.
Definitely learned a lot. So thank you.
Awesome. Yeah, it was fun. Thanks, Ashley. Thanks for having me.
All right. See
Thanks,
you
John.
guys. Thank you.